Hey guys, what's up? Alec back with the daily stock market, and look at that. Apple is continuing to soar even though we're seeing the stock market beat down majority of stocks right now, and we could potentially have another bearish week ahead. So make sure you stay throughout this entire video if you want to see what I personally think is going to happen with the stock market. You see Apple's up 21%, up to new all-time highs, breaking new all-time highs consistently and frequently as well. However, it looks like the support right now is waning down a little bit. So if we look at the last year support and they pull out the ruler, you can actually see what's going on. If you draw the resistance and the support, you can see that it recently has broke out of the resistance up there at the top. Okay, so there's a good chance that this right here, the top yellow line, could be the new support, and that number right there can be the new support. So we might only see Apple retrace as low as like $165, for example, although it could go underneath that support again and retrace closer to the support that we've been seeing over the last year or so, which is around 140, which was that resistance that it established back in 2021 in the beginning of the year at about $140. Then Apple actually just transferred that $140 resistance into $140 support, and it's probably even closer to $165 on that new support. So if you're a technical trader, check that out. See if Apple actually did set a new support line when it broke out into new all-time highs last week. So with that being said, typically I want to be buying under $150 per share on Apple. I might have to raise my price target on buying to $165 per share. Of course, I'm still dollar cost averaging in to Apple for the long term in my Roth IRA accounts and my individual accounts for long term. Dollar cost averaging in is the best thing you can do. And then if we see big dips back to under $150 per share, that's when I'm personally going to be buying a little bit heavier on Apple. So after that, we have Affirm to $114, down around 4% on Friday. However, you can see if you scroll out to the last month, they're down 22%. So they have been not having a good month at all. All right, they IPO'd at $50 per share, $49 to be exact, and shot up pretty much straight up to $170 per share. However, now they're cooling off. All right, so Affirm is one I definitely want to get into with a $32 billion market cap. And this is definitely a risky one because the business model hasn't proven itself over long term. You know, it is a newer kind of business model that people are all of a sudden jumping aboard on. And for all we know, that business model could definitely implode on itself. All right, so personally, I want to buy this one under $100 per share, closer to 95, and even under $95 per share. So I'm going to be patient with Affirm, waiting to buy in on them. However, we see some strong supports and resistance that they set around September, around $107 to $115 per share. Could be a good time to be buying in. And then earlier this year, it set some supports and resistance as well, right around $100 to $115 per share. So that's a pretty strong support and resistance, right around $107, $105 to $115 per share. So if it breaks below $105 per share, that probably would not be good news for Affirm, because then it can go as low as $80 or even $60 per share once again. All right, so the next one on the list is going to be Upwork, down 5% on Friday, and they're still down 26% in the last month. All right, so look at the TA that's on this one, and you can see that it's at a 52-week support, right? So the first support line, you can see right where it's at right now, around $35 per share, which is the 52-week low. And then you can kind of see some more supports right around this level, and then you can see the highest one right around here, and then a middle one right around here. So there's a lot going on with Upwork right now, and there's a lot of possibilities that you can swing trade. You know, this can be a $40 swing trade. You can swing it up to $40. You know, if you're going to be an option trader, that can be a good idea as well. Or if you're a little bit more patient, you know, $50 per share. I think Upwork is safe to say that it belongs right around $50 per share. All right. Now, with that being said, just in 2020, they were 20 $8 per share, and they were as low as $5 per share in the past. If you guys have been following me for over a year, you probably remember me talking about Upwork a lot. We were buying right around $8 per share, and we bought majority under $10 per share. It even got as low as $5 per share in 2020, and then it absolutely skyrocketed. It 10x'd. We sold out majority of our position right around $20 per share, but some people did hold for long term, and they're still reaping the rewards off of Upwork. So I love their business model personally. I think their business model is going to be here to stay, and I think it's going to be a huge competitive business model in the future, because we also have Fiverr, for example. Fiverr is their biggest competitor, and that stock could have easily made this video today here too. So at a 52-week low and around $50 per share is where I want to sell Upwork, but I want to honestly buy under $30 per share. But I am starting my position now right around $35 per share. All right, so next one up we have is NVIDIA to $300 per share. And if you look at the last 3 months, they're up 33% over the last 3 months. So they've been extremely hot. Just like Apple, this is one that might have set a new support and resistance, because for the last year, they were following this support right here and this resistance right around here. So you can kind of see they shot up right about right there, and broke out of the resistance and set themselves up for basically a new support and a new resistance. So it'll be interesting to see how that plays out, because this right here might be the new resistance, and the middle yellow line, or now the top yellow line, might be the new support. All right, so with that being said, $300 per share could be a pretty good time to be buying into NVIDIA for long term if that is the new support. However, I personally want to be buying under $250 per share. I think if you can get in under $250 per share for long term, that will definitely be paying off. NVIDIA is mainly only for long-term investors, which is an important thing to realize. And it could be very important in the metaverse too, because they need those GPUs, and the chips that they actually make are some of the best on the fastest ones on the market. But don't be surprised if Apple puts out a faster chip that will eventually beat out NVIDIA. So that's why I'm a huge Apple investor. And, you know, Apple could easily take down a Goliath like NVIDIA, even though their market cap is almost 1 trillion. Apple could almost absorb potentially 50% of NVIDIA's market cap over the next 10 years. And that's an extremely bullish case on Apple and a bearish case on NVIDIA. So keep that in mind and take it with a grain of salt. And then next up, we have Etsy to $225 per share, down 4% on the day and 12% in the last month. And you can kind of see that they're following this nice support and resistance that we've talked about on these other stocks like Apple and NVIDIA that have actually broken out of their support and resistance and established new supports and resistances. But Etsy, you can actually see right here that it's currently at its old support. All right, so it's a good time, probably, you know, I can't say for sure that you should be buying Etsy, but in my personal opinion, it could be a good time to buy Etsy, with it being down 25% from all-time highs. All right, Etsy is a great stock for long term, so you mainly want to be buying as a long-term holder. But yeah, if we go out to the last month and go from its all-time high, it's down 24% from its all-time high, which was around $300 per share. So it could be a good time to load up. And if you want to do some TA, you know, on the last few months, you can see those supports and resistances. It's headed down right now, so it'll be interesting to see if it goes a little bit lower, if it pushes under $200 per share. But I think under 215 and as close to as you can get to $200 per share is going to be a great place to buy in. And remember, when you're doing your technical analysis, the stock doesn't always follow the trends. So just because we can draw a straight line and it's been following, let me draw that again, and it's been following this support right here, you can see it's hit 1, 2, 3, 4, about 5 times now, and it's gone up and bounced off that resistance, it doesn't guarantee that it's going to, bounce off that resistance again. It could easily go lower and back to like this level right here. So keep that in mind. This is just an indicator that shows that it could be a good time to buy, and that's why people look at technical analysis and do this kind of stuff. Fundamentally, if you're going to look at fundamentals, which you definitely should when it comes to long-term investing in Etsy, fundamentally, this company is very sound. It's a great fundamental company and a great long-term company to add to your long-term portfolio with only a $28 billion market cap currently and a 66 PE ratio. And it's right in between its 52-week high and 52-week low. So in my opinion, right around $200 per share, I'm going to personally be buying into Etsy for long term. Now, we won't talk too much about PayPal because we talked about them several times in the last videos. They're one of my favorite buys in the entire stock market. So PayPal stock is one of my favorite stocks in the stock market right now that I'm personally buying right now. And you can see 34% down in the last 3 months. PayPal's hanging out at $188 per share, which was just $300 per share earlier this year. And people were loving buying PayPal at $300 and $280 per share. But now that it's $180 per share, nobody wants to buy PayPal anymore. What's going on, guys? And you can see that there has been a support here right around 175, right around $172 in the past. So that's a pretty strong support. You can see after it rallied from $100 per share, it stopped. The first time it really cooled off was right around $170 per share. And then it kind of dipped down to only 172. So it set that support up at the middle of last year, and it hasn't returned to those levels in about a year and a half. All right, so it's really at like a year and a half low. Forget a 52-week low. So personally, I think PayPal is a great company to be invested in over the long term. You can see it's around 2.6% of my portfolio diversity. We have around 13 shares, $2,400 in PayPal. So obviously, needless to say, I am betting big on PayPal. And if you are observant, you can see that I do have an option call placed for PayPal. All right, so if you're in my close friends list, you know which option call this is, and you know about 3 other option calls I ended up posting earlier today on Sunday. So if you want more ideas in the stock market, see what I'm buying, when I'm buying in real time with option calls and stock market activity daily, option calls activity weekly, then make sure you DM me because you're going to absolutely love it here. All right, so next stock up, we have Roblox, up 19% in the last month, up 32% in the last 3 months. And wow, look at that since it's IPO'd, which everyone thought when it IPO'd at $64 earlier this year, that it was really overvalued even at that price. But now it's almost doubled from IPO, and it has a $67 billion market cap. And people are saying that might be a tiny market cap compared to what it could have in the future because of the metaverse potential. So obviously, when Roblox IPO, there was no metaverse hype yet, and you can see right around November 5th is when a lot of the metaverse hype started kicking in and absolutely skyrocketed the stock. So in my opinion, this one can be overvalued a little bit just because of the hype. But if that's the case, then you can also make an argument that NVDA and Apple and a few other stocks we talked about on this list are also overvalued at the moment because of the metaverse hype. Okay, so if you got this far in the video, you know that I'm giving you that little gem right there that some of these might be a little overvalued. And if you're a little bit patient and wait till the metaverse hype dies down and dies out, you can probably get these when they dip down. All right, and in my opinion, the metaverse hype will die down. And the reason I think that is because people don't realize the metaverse is going to be huge, obviously, but people don't realize that it's really 10 years out. Not even really 5 years out. A lot of the metaverse stuff is really 10 years out. So a lot of money is going to be made in the metaverse, and you should be dollar cost averaging in is the best thing you could possibly do with something like Roblox or NVIDIA or Apple instead of trying to time them, because it's pretty much guaranteed that the metaverse is going to be huge 10 years from now. You might as well start dollar cost averaging in now for 10 years in the future and holding long term instead of trying to time the market and guess when it's going to go under $100 per share again, and and sell what you think is the top. If you sell at $150 per share, for example, that could be nothing. If you hold it for 5 years or 10 years, you can experience some massive potential gains with these metaverse stocks. And it's not all about timing in and getting in at, oh, I had to get in at $70 per share because that's the lowest it's been, in a long time. Stop with that mindset. You need to focus more on, instead of, oh, I have to get in at this low price, just try to get the best deal possible. Instead of saying I have to get in at 70, be happy with getting in at under $100, and dollar cost averaging in a little bit heavier under $100. And if it does get down to $70 per share, then awesome. That's when you can buy a little bit more. But you don't want to have the mindset of, oh, I'm only going to be buying at $70 per share, because then you often miss the boat with that mindset. And you might want to be careful too, because this week we have the Fed meeting coming up on Wednesday, and you can see the Fed is expected to speed up the end of bond buying and signal interest rate hikes are coming. All right. So we know that Jay Powell has been hawkish, and he's, recently started this new trend of being uptight and hawkish and bad for the stock market. He's been good for the stock market for so long, but he's kind of done a flip-flop, and interest rate hikes will mean that people have to pay more money for real estate. So that is a huge bearish sign for this week, what people are scared about this week, and why people think that this week is going to be bearish. And you can read some of these articles yourself on your own time, which I definitely recommend reading at least 2 or 3 of them so you can familiarize yourself and be prepared for what might happen on Wednesday, because there might be a bloodbath in the market on Wednesday. So drop a massive thumbs up on this video and a huge comment below on what stock you like the most that I talked about in this video. If you appreciate my content that I put out for you guys almost on a daily basis, it's the least you can do. I go in depth through all these stocks and just, speak my mind, let you know what I'm thinking candidly about these stocks. And I do it on Sunday for you guys. So I constantly give up a lot of my weekend for you guys so I can make these videos, and so we can be prepared come Monday morning and throughout the rest of the trading week. We at least have a plan. So guys, share this video with a friend if you think that they'll find it helpful. Like this video, comment below, subscribe with post notifications on, and I'll see you in the next video. Remember, don't time the market, buy the market. Peace.